Hi, Vieira with the stockmarketlive.tv. Today we bring to all investors other case study, information available in our website, referring to the existence of a bubble in the biotech sector in the United States. If you read the article, I said I'm going to crash several US companies in this sector. So today we are going to focus in one of the most important biotech companies in the world, and one in fact that it is related to a long-term investment in the US stock market, where I named this company along with Amgen top picks for the long term for the best bull market in history. We have a very long history investing in biotech. 5 reasons to sell Biogen. We are going to refer to the material that exists on the website. If you visit the blog, you click on one of the most recent articles, 5 reasons Biogen is a strong sell. On this video I'm precisely commenting the article itself. And if you click on the link existence of a bubble in biotech, you are redirected to this article. It has been here since June. I already informed subscribers long time ago for the existence of a bubble in the biotech sector, and the title is precisely Vieira warns. Vieira is my name. Stock market bubble in biotech sector. And if you click, if you are a subscriber, you can read it, and I'd say, I'm very explicit, saying that I'm going to crash several biotech companies. Therefore, be careful if you have a position in that. Biogen, it was one of them, since I consider that on the day that shares they trade almost to $500, here you have my comments, which I'm not going to repeat. We are not going to waste time here commenting on the information that you have on the article. 5 reasons I downgraded Biogen to strong sell above $455. Reason number 1, no one has a record equal to mine. Reason number 2, if I say there is a bubble, you sell. Reason number 3, you do not make questions. Reason number 4, do the opposite if you dare. That is to say, if you have questions, then buy, and then we'll see what is going to happen. And number 5, believe me, you are going to learn the hard way. So thereafter, we have links to the example of Keurig Green Mountain coffee. Just one example among more than 100 that crashed, all of them that I said that was going to happen. Today you have shares of Keurig Green Mountain coffee priced below $70. Last year, this company, everyone was saying, in particular retail investors, that shares they were going above $200 because Coke had a very important stake in the company. So there was no other possibility. There was never a possibility for Keurig to crash. Never. Never. The investor always, the fool always believes that he knows what is going to happen. All right? So Keurig crashed and Biogen crashed, and you were warned in due time. You have here one of my comments. I'm truly excited if you lost all your money. You knew that was 100% certain. You just have to visit the website and you were warned about it. You have some comments with regards to the information that appears on American websites, stock tweets, Seeking Alpha, The Motley Fool, upgrades to $600, Biogen, a terrific investment long-term opportunity. And in particular, you have a video from this stock analyst, the famous Gene Kramer in the US, host of the program Mad Money on CNBC, saying that inciting or answering to questions, investors' questions, that you should choose Biogen as a speculative play, and shares of Biogen, they were trading above $400. So today you have shares of Biogen at $300, and if you are a believer that Biogen is going to be priced at $600, today you have 50% discount. All right. So if you bought shares at $400 plus, and if you lost meanwhile your account, you have to ask CNBC or Jim Cramer or all those that they have been upgrading and writing false reports on those American websites. Why did you lose your money? But again, I repeat the same sentence that it is here. I'm truly excited if you lost all your money. You knew that was 100% certain. And for some reason, in fact, it is not a coincidence that here you find the image of Keurig related to Biogen. Then you have the chart, just to confirm that today you have shares of Biogen at $300. Therefore, shares they closed down $155 since my downgrade to strong sell. Bear in mind that was my best case scenario for Biogen, and Biogen almost traded to $500. It could have been trading to $800, $900, you see. But my friends, today you have shares at $300, and this is a fact, all right? You don't have $600, you don't have $800, you have $300, all right? So if you don't know what is going to be the right side of the chart, it is better that you stay away. Thereafter, you also find a video on Yelp, a very important one, other stock that I recommended publicly on the article, and in fact there are more than 20 articles about Yelp, double the size of your short position, how to become a millionaire investing in Yelp, and so on, saying always short the stock. And this has been the same policy since my downgrade to strong sell above $92. The stock was not worth more than $89. When shares they trade above $90 to $92, I said, my friends, here you have the example of a bubble. Shares they can continue moving higher, $98, even better, you sell short more. The more that it goes, the higher it goes, the better it is. Today, you have shares around $35. And this program, this video, is about an investor who is calling Jim Cramer in the US, saying that he's down 50% in Yelp, and what is his opinion about it. And Jim Cramer, you just have to play the video. The title is, "This stock has lost its mojo." What's mojo? I don't know. So, it was not preferable to tell the truth to investors when shares of Yelp trade one day to $90 and to say, my friends, sell everything, and now that you sold everything, you have a very large profit, use it, all this profit, to reverse to the short side and to invest on a long-term basis in Yelp on the short side, since this is a bubble. And this is what I said, not only with regards to Yelp, as well as, for example, Twitter at $73. And with regards to GoPro, 95, and so on. So why to remain bullish Yelp for more than 1 year, while this stock has been always a strong sell for the crash? You only invest in a company after shares, they crash. And you only invest in a company after you make the most, after you profit from the crash. As I demonstrated in the case of Twitter, last year when I recommend to buy, to cover short positions at $30, precisely on the day that shares they trade at $30, I told you, look, if you bet on the crash, you can now buy or speculate on Twitter at $30. Since you already profited, the stock is not going down to zero. Now you can reverse to the long side. They already lost so much money, the stock is likely to bounce. And it bounced to $50 plus. And I said, now sell. Sell, and the stock crashed again. And you repeat this over and over. And so if you repeat this over and over, the more you make, the more you can make. To the point where your risk is zero. Since you are not investing or gambling with your initial capital, but instead all the profits that you have been making since IPO. And this has been the case with Yelp, it has been the case with Twitter, and fortunately also the case with Biogen, although I'm not comparing, for obvious reasons, Biogen to Yelp or Twitter, for God's sake. No. Biogen, it has been always a quality company, quality investment. It happens that Biogen, it was, in my personal opinion, and in opinion of the Federal Reserve, overpriced. So you just said, if you don't believe in my opinion or comments, again, I repeat, you have two options. You do the opposite, you buy, and then we'll see what happened. In Yelp, you lost your money. In Keurig, you lost your money. In gold, you lost your money. Commodities, you lost your money. In Twitter, you lost your money. And in Biogen, you lost your money. But you can continue. I don't mind at all. Subscribers, they don't mind at all. So, and we are talking about a quality company. And I already referred, in fact, for example, to Apple. If you didn't sell the stock at 133, that was a huge mistake. Even if you are a long-term bullish in Apple, and while the stock during the past few months already lost significantly, share split, I already proved that the stock for several times lost more than around $200 per share in several moves, while, for example, you had ahead of earnings my call in Amazon saying that it was by far better than Apple, going all the way up to my price target $580. At $580, you have other call real time saying if my price target $580, probably it is better you sell. And on Friday, shares of Amazon, they closed at $529. So where is the complication? I don't see, quite frankly, where is the complication, unless you are doing the opposite. But that is your personal problem, it is not mine. So congratulations to all those fund managers, investment banks, continuing following our guidance, and we are going to help you here, along with other stocks, to crash all the retail investors, that they continue being deceived with the remarkable work on CNBC, Seeking Alpha, stock tweets, and so on.